All right, welcome back. Joining us virtually is Robin, our local CPA. Robin, good afternoon. How are you doing today?
Good afternoon, doing great.
Wonderful. So we're starting a little series today. We're talking about filing, and today's topic, it's married filing separately. So what's your hot take on this?
Okay, so I personally think that married filing separately is one of the most confusing or misunderstood filing statuses. And it's also set up to be a disadvantageous filing status by the IRS. Now, if you are married for tax purposes, you're considered married for the full year, whether or not you're married on January 1st or December 31st. So any point in time during a year you're married, you have the option to file married filing joint. If you do married filing separate, that means you and your spouse are both filing separate tax returns. Now, one of the cons of this is that if you're filing separate, you actually end up in a singles tax bracket, which means if you made $80,000 a year as a married couple, all that money would be taxed at 12% tax rate for 2021. If you decide to file separate, and let's say one of the taxpayers had 75,000 of that money, that would be taxed up to 22%. As well as if you're filing separate, you do not qualify for the earned income tax credit, the daycare credit, or you only get 50% of child tax credit, as well as you do not qualify for education credits and a lot of other phase out credits. You're at a lower limit. So you might be saying, why on earth would anybody want to file as married filing separate? Well, if you are going through a divorce or legal separation, sometimes that's a good reason to file separate, because this puts you not associated with your spouse or soon to be ex-spouse's income. Because if you're filing a joint return, both signatures go on the joint return. So even if you're a homemaker and have no income, you're signing a return saying you're now liable for your spouse's income and any tax liability they have by filing a joint return. So even if you're happily married and don't want to associate your Social Security number with your spouse's income or high tax debt, that would be another reason to file separate. So filing separate is a perfectly legitimate filing status to separate yourself from your spouse's taxes, but just know that it is meant to, you lose a lot of benefits from it.
I learned so much from all of that. I made sure to take some notes. Robin, thank you so much for starting this series this week, and I look forward to continuing it with you next week. Thank you so much for joining us.
Thank you.
All right, guys, if you want to rewatch everything that Robin just said and go back over your notes, it's going to be on our website, klaf.com.